Hello friends, how are you doing? Today I will discuss about the Elliot wave principle. In the corrective pattern series, I will discuss the triangle pattern, and mainly the triangle pattern is contracting triangle. So why I am stressing on the name? It is as the name suggests, the edges of a triangle should contract in the end, and the two sides will converge at the end point. So, before finding out the pattern, you will need to keep in mind that the pattern should look like that it is contracting. And you can notice this pattern in uptrend and in downtrend as well. And the hypothetical structure will look like this. It will consist of the wave A, this is the wave B, and wave C, wave D, and wave E. So, if you will notice in the diagram itself that wave is consist of two waves in itself. It doesn't necessarily mean that it will be consist of only two waves. It can consist of many waves. Then wave B as well, it can consist of many waves in itself. Then wave C, similarly wave D and wave E as well. So the main point is that you will need to look for the three touches on the upper side of a triangle and three touches on the lower side of the triangle. When you will get the three touches each on the upper side and on the lower side, then it will be easy for you to connect them, as generally even for to draw a trend line we need a three touches. So similarly in the triangle pattern also you will need to find out the three touches on the upper side and three touches on the lower side. And in the uptrend, as soon as the price breaks above this range, you can open an entry order with the stop loss or below the latest swing low in the series. So that's how you will need to apply this pattern in the trend. Before that, we have got the some guidelines. I will tell you that so that it will be easy for you to identify the pattern. And similarly in downtrend, wave A, then wave B, wave C, wave D, and wave E. It is almost similar to uptrend, just it will be exact inverse of the uptrend contracted triangle pattern. In the uptrend, you will need to get the three touches on the upper side, three touches on the lower side, and as soon as price breaks below this range, then you can open a short position in that instrument with the stop loss of latest swing high in the series. So the triangle, one thing you should keep in mind, friend, that the triangle will not be exactly looking like the ascending triangle or the descending triangle. It can be any kind of triangle, just the edges will be contracting, and then at the end point one it will get converged, and after that the instrument will break below that range. That is the main thing. So let us look at the rules to identify. Triangle is mainly is a corrective pattern which gets contract or expand. Expanding triangle I will explain in another webinar. Today just I am discussing the contracting triangle. Furthermore, it can ascend or descend. As I told you, it is composed of five waves. Each of them has a corrective nature. Why corrective nature? Because the each wave in itself got so many waves. That's why it is called as the corrective nature, means they can keep moving in themselves. So let us go back to the chart again. If you will notice in the diagram that, as I told you, each wave is itself showing two waves, three waves. Like D has got the two waves, B has got the two waves, A has got the two waves. Similarly, it can consist of more than 2 waves, 3 waves as well. That because, as I told you, market doesn't follow any rules, it follows its own rules, and that's why it is difficult to identify a particular pattern if you prefer a pattern trading. And these days, so we have got the software also which identifies pattern for us, but we will be getting this pattern very rarely. And just for the sake of being teaching to you, showing to you pattern, I am teaching you. Sometimes easily you can find it, sometimes you may not get the exact pattern, so you will need to use your own logic. So keep in mind, friend, these are the corrective wave structure. It is consist of the 1, 2, 3, 4 and 5 waves, and each of them can consist of so many waves in itself. Just the two to three waves are mainly seen, but more than that can also be seen in each wave, and edges will be contracting. It is composed of 5 waves. Waves 1, 4 and 1, wave 1 will overlap. Wave 4 can't go beyond the origin of wave 3. As I have shown you on diagram that the instrument will start making a series of lower swing highs as well as higher swing lows. Then only triangle pattern can get formed, because the basic rule is that range should get contract in the end. In here also, wave 3 cannot be the shortest wave. As in our Elliot wave principle, wave 3 should be the longest one. Here also it is noted that the wave 3 cannot be the shortest one. At least it should be bigger than the other 4 waves. In the contracting triangle, obviously wave 1 is the longest one, just we have seen in the diagram, and wave 5 will be the shortest one. And opposite to that, expanding triangle, I will show you on Monday. Triangles normally have a wedge shape which follows from the previous. It is mainly a continuation. It is mainly called as a continuation pattern as well, because the trend original instrument were generally follows a trend which originally it was having, and the range gets break to that direction itself. And triangle occur mainly in waves B, X and 4, never in wave 2 or wave A. So that's why you can look out this kind of pattern in the wave B, in the corrective pattern. If you remember, in the correcting pattern we have got the 3 wave structure, wave A, B, C, and in that wave B this pattern can occur, and or in triangle 4 or in wave 4. Wave 4 is also a corrective wave, but it cannot happen in wave 2 or the wave A. Wave 2 just happens after the wave A, and it is the first corrective wave in the Elliot wave principle. Wave A is motive waves. So better I will show you here on chart, so that we, after looking on chart, it will be more clear to you. So the triangle will look like this. As per our own guideline, we have got this is the downtrend, so we will need to find the 3 touches on the higher side. The instrument is in downtrend, you can notice here that, and it is mainly a continuation pattern, so expectation will be the it has to break to the downside, and most of the time it follows that rule. So as we got, the important thing here is that we should get a series of higher swing lows from the upper side and lower swing highs from the bottom side, and we have got that kind of pattern. And this is the exception case because the as I am showing you the pattern in the currency instrument. What happens if you trade currency frequently? You will be knowing that when the data is about to get released or after the data releases, currency moves in an erratic manner. So it will be very hard you to get the exact pattern as you learn in the diagram. That's why you will need to correlate that pattern with the actual trading. I'm stressing this point because is that you don't need to get confused that why this swing low is higher than the series, because it may be a move after the data release or in some any news event. That's why it has broken that series. And believe me friend, I have scanned so many charts to get the exact pattern, but I didn't find it. And instrument you can, if you will look in the commodities or in indices, you can get that. But these days when the algorithmic trading is in fashion, it is very hard to get the exact pattern. So what you can do, you can correlate the structure with the diagrammatic pattern you have learned in the course. So if you will notice, we are getting the our conditions are getting satisfied in this structure. That's why I have decided to show you this structure. So let me name it. I will name it so that it will be easy to understand you. This is the wave A. You can read like this, but also we have got enough space, so this will be the wave A. Why roughly we have got the two waves, three waves in itself. That's why you can name it the wave A. If you will draw, you have got the internal waves in itself. And then again wave B, you have got the interval waves in it, 1 and 2. It's not proper, so I am removing it. Then you have got the join the swing high and swing low in the series. This is the swing high and this is the swing low. Similarly for wave B, you will need to join, either you can join this or you can join this, doesn't matter. What matters is the breakout or breakdown from the series. You need not worry about the exact trend lines or the exact pattern. You will just need to keep watch on for the breakout or for the breakdown, because that only matters for us. Otherwise the instrument can remain in that range for any amount of time. We have got the 5 waves and the finally break down to the lower side. it has seen a breakdown. So what you can do, the main thing is, if you would have got the exact touch here, it would have been much better. But as I told you, market follows their own rule, and that's why you will not get the instrument or any price moves as per your rules. That's why you will need to adjust to the market's moves, and if we will adjust here, we can get a structure and we can open a short position here, and stop loss will be above the high of this series, or even if above the this swing high in the series, and swing high in the series is here. Swing high in the series around 126.531. The problem is here that this is the short time frame. This is the 15-minute chart, and it will be very much better if you get the pattern on higher time frame. So I have tried to find out that the pattern on the higher time frame, but I failed to get that. That's why I have brought it on 15-minute time frame, and on in 15-minute time frame, just to show you the example. Rest is your work, and to spot the pattern, and if you find it difficult, you can easily skip this pattern. But my purpose is to teach you all the patterns, so I am teaching you, friends. And then the rules, what you can do, you can keep the stop loss here. We have got the breakdown here. As soon as you see a breakdown, if you are a breakdown trader, you can use this kind of structure, and then stop loss will be above this triangles range. Either below this level, or technically the it has been suggested that stop loss should be above this range. But sometimes what happens these days, if you keep the stop loss above just that technical levels, most of the times you will get stopped out. Like, the as per the technical level, stop loss should be above the latest swing high in that series. But if you will keep here, you could have got stopped out easily. That's how the market moves. Market first will act like or move like in such a manner, it will break all the structure, and finally it will go in your desired direction. That's why you will need to become more smart these days. It was very easy in earlier days, that time when trend following system was in process, and because that time manual trading was in fashion, and that's why everybody was following the same thing. But now the big traders has got the algorithmic pattern, and as soon as they get a data release or sometimes any news, the currency or the instrument keeps moving in the similar direction for a longer time frame. And if you will read the latest successful traders of this decade, you will notice that most of them saying that market keeps ranging for very short time. Most of the time it remains in sideways trend, and only two things that are successful in the market are trend for a very short duration and sideways trend for a very long duration. So that are the characteristics of the current period. and that's why pattern trading doesn't very much popular these days. You will need to focus on the price action, but you can use these patterns in your other with your other principles. Simply like this, we have got the ABCD pattern here, and then we have got the breakout, and as so you can use this idea. As soon as you see a breakout, you break down to the lower levels, you can open a short position with the stop loss or below these high levels. And Euro JPY is a fast moving instrument, so minimum keep in mind that you will need to keep the 50 pip stop loss. Suppose you are keeping the pending entry order here in this level 126.3, then you will need to keep in mind that your stop loss will be around 126.5. So then only it will be a very safe for you, because this is the very fast moving instrument and it has got the daily range around 50 to 100 pips. And if you are looking for in other currency pairs or in other instrument, then you will need to know the range of that instrument that you can get in by using the ATR. So sell, you can open a sell position here. Most of the traders, those follow a breakout or breakdown system. What they do, they keep a pending order, because you don't know, as the currency pairs keeps moving 24 by 7 of the day. You cannot be awake all the time. That's why what they do, they keep the pending order if they notice this kind of pattern. And better you use this pattern on longer time frame, it will be more useful, because on the shorter time frame it will not work on very, it will be less successful on the lower time frame and it will be more successful on the higher time frame. So keep looking for this pattern. This is the sale order, you can keep here. Below these levels, or just another idea what you can do, the latest swing low in this series is around 126.3. So you can keep the order around 126.1, 126.2 levels. So it will be more confirmation or breakdown. Sometimes what happens, like it has made a new low, then it reverses back to the higher level, and after that it has got the breakdown. This also can happen, and this rarely happens these days. That's why I am bringing such a structure where you will need to use your brain more than just following simply a pattern, because trading is not that easy, and if it has been so easy, everybody would have been successful, but that's not the case. The trading is the most difficult thing, and to use any system you will need to practice it more and more. First follow in demo, and then make the reports, and then use them in live, because when you will be confident about your system, then only you can use it without any hesitation. The entire process will be like this. Find the contracting edges, then you can join them to make the triangle, contracting triangle. Once you get the series of the lower swing highs and the lower higher swing lows, it will be easy for you to join them. And once you get a structure, it will be easy for you to look out for breakdown. And after you get a breakdown, it will be easy for you to open a short position. Two three things you can follow: either you keep a pending order, or you can open a market position. But sometimes different thing can happen, like what happened here. Here also, if you will join the three edges till this, you will get the similar kind of pattern. Let me show you. I tried to show you on larger diagram to make so that as you are watching the first time, so it will be easy for you. But if you will join the lines, you will get the similar structure here as well. You have got the series of the lower swing highs, and then higher swing lows. You are getting exact structure like a contracted triangle. Then again you can wave A, B, four waves you have got in itself small, and the breakdown, it will be must during any news event, was such that you can't even open a position if you are waiting for a trade to open at a market, because if you will try to open around this level 126.14, then stop loss will be around the high in the series 126.437. So as this is the diagram on the lower time frame, the stop loss is still better at better levels of around 40 to 50 pips that you can do. But if you will notice this kind of thing on higher time frame, stop loss will be much more higher to those levels, and it's not feasible to keep a wide stop loss, because sometimes you don't have a guarantee that you will get a double or thrice of your risk. So you can keep a pending order around this level as well. As soon as it breaks this series 126.248, so you can keep a stop loss around this level. So pending order around this level, and then stop loss will be above high in the series. For the safety side, I am giving you an idea of wider stop loss. Most of the position traders follow a wider stop loss technique, but on a lower time frame, you can minimize your stop loss. That's why you can combine the higher time frame with the lower time frame. Look for a trend on the higher time frame chart, then you can go back to the lower time frame and minimize your stop loss levels, because as per the technical trend, it should be stop loss should be above this high. But sometimes, as I have shown you here, what happens, instrument reverses back to those levels again, and unnecessarily you will get stopped out first, and then the instrument will move to your desired direction. So if that happens, unnecessarily you will be losing money. So to avoid that kind of scenario, what you can do, you can keep little wider stop loss and profit target as well. So that's it for the day, friend. If you got any question, any confusion, type in the comment box. I will be happy to answer in my next webinar.